So yesterday we looked at support and resistance. We started by looking at the price delivery algorithm to build up on what we're looking at yesterday, which is support and resistance. And yesterday we said this trend line for the support and resistance can be drawn in whatsoever way you want to draw it. You can draw it horizontally, and you can as well draw it diagonally. So you can draw it to monitor an uptrend. You can draw it okay, sorry. I did not I had gone out. Okay, so yesterday we said we would draw let me get this out. We said we would draw this trend line, or what we would call the support and resistance horizontally. You could as well draw it diagonally, but at the end of it all, the most important thing is the outcome of what you intend to do. So let me just get this out. Sorry for this. I like drawing here so much. Okay, so I'm going to demonstrate using this. I was trying to analyze it in the morning, so I hope it can be helpful. Let's just use this because we analyzed it and we traded it and it delivered. So, okay. So, ladies and gentlemen, when you're doing support and resistance yesterday, we said the first thing you need to do is, of course, identify the market price. That is the first step. You identify the market price, and then you decide on which one you want to begin with. If you want to begin by drawing your supports, then from the current price, you're going to look out for a V shape. The edge of the V shape is where you draw your support, right? The edge. I'm trying to avoid using some of those technical terminologies, but I hope I won't help. Sometimes I will have to bring it on. But to make it more simpler, you look out for a V shape. So the edge of this V shape, or the sharp part of the V shape, is where you pick your horizontal line and then you put there, drawing your line there to be as your first support. And when you look out for this V shape, or the sharp part of this V shape, or sharp point of the V shape, you look out for the most recent V shape letter formed with regards to the current price. So like, for example, if this is our current price, you slightly just look down and then look backwards in history and look out for a shape that is like a V, where the price dropped and then rose. So meaning this point of return becomes, this point of reversal becomes your support. Same thing when you want to draw your second support, you look down with reference to the first support and then look back in history and identify the most recent V shape, meaning a point where the price dropped slightly and then reversed to the upside. That is where you draw your support. So you will continuously do this for as long as you want, and you can establish as many support as possible. All right, you're not limited. Why you draw that? Because you know in the future, later on, it is going to be helping you to just monitor how this market price is going to be playing about this support and resistance. You want to see how the path is going to be followed. If at all there is going to be a point where the price is going to respect this support or the resistance. Let me put this mode. Okay, so that is what you want to do. So, and in a simple term, just for a purpose of a recap, we said the first thing is if you want to draw the first support, we're going to look at the current price, then we look out for a sharp edge, which in this case would be this. Why we consider that? Because we looked at price, we looked at a point here that the price left to this point, went up before dropping down to this very point to retest it, and then breaking off structure at this level. So that there was a break of structure at this level. So it definitely means that V shape becomes, so there was a break of structure here. Okay, so it means as the structure was broken here, this was a momentum builder, for that bullish movement. So this edge becomes our first support. Fortunately now, it also acted as the same support at this point. And throughout history, if you look at it closely, it is a point that is very strong support because the price tested it here, retested it, and this is the third retest before build, that strong bullish momentum. So that is what you do. So that's the first support. So when you want to draw the second support, you're going to make reference to the first support, look down and look back in history and identify that edge, that V shape, a point where the price dropped slightly and went up. And in this case, if you look at this, we shall see that, we shall appreciate that the price left from this point, dropped to this point before picking up, So before picking up to that point. So it means if we look at it with the reference to the first support, this one qualifies to be our second support. So you can do this all the way for us and draw as many lines as you want, right? To help you in the future to check on how price is going to fare. So you can continue doing this, that. You can continue doing this. Here you can also draw this. So you don't, though you, as you're doing this, you don't have to over congest your chart. Otherwise, it will look funny. Okay, so we are done with the first support. Drawing our three supports. So we're going to go to our resistance. So we make reference to the price, to the current market price. Then we look up, and as we look out for the most recent swing high, or what we will call an inverted V shape. That peak is where I want to put our first line of resistance. So since this is our current price, we're going to look up slightly and look out for an inverted peak, an inverted V shape, or a peak which is slightly above the current price. The most recent one, the first one we're going to come across will be our first resistance. So we shall draw it as our first resistance. So let's scroll towards the left, backward in history. We want to see. I want to just see at what point. I hope you see, at least the fortunate bit is even as you do the scrolling, normally the current price is labeled. So it is in dotted line. So you're able to tell where your current price is. Yeah. So that's any point. Now here we are. So this is where our current price is. This is where the current market price is. And this is the first point, the first V, the first peak, the first most recent swing high with the reference to the current price that we have come across. So that is what we're going to, that is where we're going to draw our first resistance. So we pick our horizontal line and we put it there. So that becomes our first resistance. Remember, this is current price, this is first resistance. Okay, so that done. Then we're going to look out for another most recent peak we're going to come across with reference to the first resistance. So this is our first resistance. We're going to look up and back in history. The first swing high we come across becomes the point where we're going to draw our second resistance. So we'll pick this and put it there. We'll put it there. See that? We'll put it there. This is really a major. These are two major resistance. Okay. So if you've done that, so you're based on history to try to see what the future holds. Now, in this case, if you try to go slightly backward from resistance 2, we can really still appreciate and gain a lot of confidence in what we have drawn. Be it a line, we see that this point came close to touching the line, and the same applies to this point. But if we were to consider an area, then I think all this part will be part and parcel of the resistance area 2 together. But because we considered only the line, we're focusing only on a single line where we're picking up the high of the longest candle there. That's why we see it being drawn as a single line. So, all right. So we shall take that as a strong resistance 2, because we have seen sort of several retests. Here it was acting as a support because the price was trading above it. But the moment there was this breakout to the downside, we really see that it became a strong resistance at this point. Okay, because now price was trying to break through above, but it was failing. So since it was trading below, it qualifies to be a resistance. But at this point, it was a support because price was trading above. Same applies to here. It was also trading above. Okay, same applies to this point. So this multiple retest happened when price was trading above. So here it was a support. So it was holding the price from coming down. But at the moment the breakout happened at this point, the moment the breakout happened to the downside, it now became a resistance, and it is still a resistance. That's because the price is still trading below it. So we want to see now how the reaction of the price will be on approaching these two resistance lines. Yeah, that's what we want to look out for. At the moment, you can check here that the price is trading below the resistance 1, below this first resistance. So if I am a trader who wants to take action without waiting for anything, I can pick up my trade from current price and I will measure until the first resistance, and that will become my take profit, which is a beautiful one, by the way. This trade is a beautiful one. So you could do that, and that is done. So you enter current price, take 2.4 or 2%, and you'll be good to go, right? Because at least you know your exit point already. You know the possible exit point. Now, in this case, if this price, like it has built up from here, if it decides to come back here, okay, and then it doesn't break through, you will expect it to retrace. And the retracement may be around here. See where the retracement is going to be? Around here. Why? If you monitor that movement, let's try to monitor our previous movement. This was how the price moved to bring about that shape. We started from here. Okay, started from here, then we went up, and then we retraced, and then we realized that breakout. You get that? So that means literally by the price breaking this market structure here, having a breakout at this point, okay, it means it is another critical mini support in this case because it is below the price. So in case there is any retracement, we expect the price to retrace up to around that point, around here. These are the area we expect the market price to retrace to, in case it doesn't break out at resistance 1. If resistance 1 rejects the price from going up and then it retraces, we know there's a possibility that the price is going to retrace around this point. We can vividly confirm, pick our Fibonacci tool, try to just put it here from where the point where the buildup of the momentum started, and then we draw it back upward to the current high or to the current resistance, and put it at the current high of that candle. And trust me, we can really tell that 50% is not very far from this area. Same applies to the 61.8% is not very far from the same area we're anticipating that the retracement may be at. Okay, but it is not very far, right? If we are to confirm it using the Fibonacci, right? It is not very far. So we expect the market price to retrace either at 61.8, which is exactly the same region closer to where the break of structure happened, or we expect it to happen slightly above the area where the break of structure happened, which will be at 50% fib level. Okay, so you have an area which you're going to take care of. That's a possible point of trend reversal. Okay, so that's just a picture to give you with regards to what happens normally in that. However, if it so happens that the market price this build up here brings about this kind of movement, it comes and then breaks above. Sorry, if this market price breaks above resistance 1, then what we should put at the back of our mind is that it may not go past resistance 2 without being rejected. There's a likelihood that it will be rejected because the momentum built up for so long. So as you know, time passes by, the momentum keeps on reducing. Traders keeps on taking off profit, and of course, the effect of too much taking of profit, the excessive sales, in an attempt to take profit, the excessive sales, to go to short as feature traders are also in the market, will result in the market price, of course, losing momentum and then reversing or retracing again. So if that is the case, if it moves past resistance 1 and it comes to resistance 2, we will know that there's a likelihood that it is going to retrace back to this area of the resistance 1, which is broke, which in this case, if it retraces to the region and then it is supported, then resistance 1 will now cease to be a resistance 1, but rather change to become support 1 with regards to this price movement. Then we shall have that kind of movement. See that? That's what we expect. So the support and resistance plays out fairly just to help us see the tentative movement in the market price, the possible exit point and the possible buying point. Now, this is what happens. So that is with regards to the horizontal support and resistance. Now, as a trader, as we said yesterday, the only thing that you need to do as a trader is if you draw this support and resistance in a high time frame, okay? Let me just get this one off. Okay, let me get this off. Okay. So as a trader, you need to look out for an early entry opportunity, if at all. Sometimes, like personally, with experience, with the time, the more you become conversant with the market and how the market fares, sometimes you won't even be taken up by which time frame you want to enter from. Sometimes you just look at the chart like this and you just conclude this is a good trade. You don't have to even do any other further analysis. Why? You just put in a few tools just to support and give you the clear picture. But you can just tell, like me, I can tell that this is a good trade. It is still building up. Yeah, it has to hit support resistance 1. Obviously, it will hit it. Yeah, because it is still building up at this moment. Because if you check on this week, this is a current session. This is 2 hours so far, roughly 1 hour and some minutes into the trading session, and it is still bullish. Much as there is a gap already created here, throughout the course of the session, this is just a mere retracement. If you go to a lower time frame, let's go, like, for example, if you go to 30 minutes, let's say, I love this. You go to, you see, look at this. The other one was just a mere retracement. You see this? So it is building up to fill up this gap. You see that? So this would be a perfect, beautiful trade to enter and take profit. Imagine you still have a possibility because the trading session is still ongoing. You have 2% to take out. And trust me, if you're to monitor this trade until the end, we're going to appreciate. We're going to see that it is really going to go there. Yeah, it is really going to hit there. In 15 minutes time frame, it is telling us something the same. If you go to 30 minutes time frame, it is equally telling us it is building up. Now go to 5 minutes time frame. You see this? You see this? Perfect, beautiful trade. Okay. Now, as a trade, of course, you know, if you want to take up an early entry, come to like 15 minutes time frame, which I prefer or I like, you can, just for purposes of safety, to make sure that you're not taken up unaware by the market in case of any change, you take off this you see this? Let me not draw that. See where the break of structure happened. See here? This is where a break of structure happened at. I don't know whether you're seeing that in the lower time frame, we experience this kind of movement. This, oh, let me show you that this was the movement. We had this from here to this point. Then we had a retracement, and then there was a break of structure, boom, all the way up to this point. Sorry, okay. So this break of structure, okay, you see that break of structure. So there was a break of structure around this point. There was a break of structure here. Yeah? There was a break of structure there. Now, if you can see very well, you know that this is from this point. See, this is where the structure was broken. So you know that this is a mini support with regards to where the price is. So it becomes your mini support. So just pick a price range, put it there, and then measure downwards. That becomes what? That becomes your that becomes your what? It becomes your first mini support. So the 1.7 becomes the margin call graph for the first call. Just a minute, guys, just a minute, just a minute. Just a minute. Okay. All right. Okay. So, wow, this is good. Beautiful trade. Good trade. Good trade. If I were not on call, this trade I would have entered it long time. I would have delivered, but nevertheless, let it go. Let it deliver. No problem. Yeah. So, um, so this is how sometimes uh, I hope you guys can. I hope you guys can. I hope you guys are following. I hope my network today is fair. Okay. Are you guys still following? Okay, if you're still following, let me see a one on the chat. Some effect, some feedback on the chat. If you're following, if it is making some sense, if it is making sense, let me see a one on the chat. Okay, mashallah. So, okay, at least there's no complaint yet today about not understanding, but this is a beautiful trade. Those who entered it, that 2% is boom out. Wow. Oh man. Okay, so let's now go to how we can draw a support and resistance in a diagonal form. Sometimes you can decide to draw this support and resistance diagonally to monitor a trend that is on a bearish sentiment, or you can decide to draw this trend line on a trend that is on a bullish sentiment, that is on an upward movement, or when it is on a downward movement. And the essence of doing all that is, one, you want to look out for an entry opportunity. Two, you want to see the possible exit points in case you enter a trend. Three, you want to see how long that trend is going to continue. So that if it is so that if, for example, if you have this, let me show you something. If you decide to draw, for example, a trend line in an upward market structure, you're seeing that there is a continuous break of structure, market structure, and establishment of new highs. And then, so you know that when new highs are formed, okay, it is an automatic conclusion that the trend is still continuing, because you are seeing that the market price is rising progressively and over time. So, a moment a market structure is broken, expect that market structure to be tested at some point. If a market structure is broken, expect it to be retested at some point. If a market structure is broken, expect it to be retested at some point, right? This is the point of retest we're talking about. So it's more like paying tribute. You break out, you lose momentum along the way. You have to come back and make peace. Come back, gain more energy to go and break out this other point which caused the problem to you. Same applies to here. When you get a blockage, when you get a roadblock, come back, gather momentum to go and break out. So if this is what you want to do, sometimes when the trend is like moving like this, you may not know how far this trend is going to continue or how far this market price is going to continue rising. You're not really very sure. But at the same time, you just don't want to look out. You just don't want to look at the market price rising. Sometimes you do as well want to take some action. You would want to take some money from the market. You want to take off some profit along the trend, right? Now, as a trader, why it is very important for you to draw this support and resistance on an uptrend. Just to, one, we said, to identify entry opportunities, the possible exit points. Three, you want to see how far that uptrend is going to go, right? And the essence of looking at how far that trend is going to go, because at a certain point, the market price is going to reverse. The trend is going to reverse. And you don't want the trend to reverse when you're in the trend. You want the market price to reverse or the trend to reverse when you're out already. Or if you see there's a possibility of a reversal, you rather exit the market because you may see the reverse of what you're seeing here happening into the downside. And once that happens, sometimes it takes a little while before the market price bounces back or regains, to give you the profit. So if you go into floating loss for long, you have to be patient and wait for the market price to have a reverse again to the upside before you can now begin smiling. So sometimes it is very important to monitor this trend. Yeah. So when you're going to monitor an uptrend, normally, an uptrend market structure is characterized by higher highs. It's characterized by higher highs, a progressive buildup of higher highs, and higher lows. Now, you may decide to draw a single line to monitor this trend. Now, most at times, if you want to draw it as a single line in an uptrend, you draw it from down. When you're monitoring, you want to monitor an uptrend, you draw the line from down. Meaning, in other words, you're going to make best use of the support. It is the support which is going to support your analysis of monitoring how far the trend is going to continue, of identifying entry opportunities. The exit opportunity will come automatically, and I'm going to show you how. So if you're drawing any trend line on an uptrend, draw it down. You draw it from down. So what do I mean? You have to make sure that you connect the higher lows only. You draw it to connect the higher lows. And when you're doing the drawing, make sure you draw it objectively. Don't force. Because in the process, in the course of this market price movement, there are some points where the higher lows may not really match the line you want to do. They may not exactly touch. But look out for any two or three that you would want your line to touch, that you would want your trend line to touch. That is what is most important. Like in this case, you could just say, okay, I'm going to pick this. I'll identify this first one, and then I connect it to the second one, or maybe to the third one. If all touches, it is fine. But if at some point it doesn't touch, if any of them do not touch, like for example, in case this one was like this, and then it does not touch, it is fine for as long as this and this has touched. That is most important. Now, it doesn't all have to touch. Why? Because you're much as you're drawing it as a line, but you're also taking consideration of an area. It is an area, really. It is not necessarily a line. So in this case where the higher low has been established slightly above where you've drawn the line, don't worry, because it is still an area. It may still be captured at some point. All right. So draw this line. Now, after drawing this line, what is then by connecting the higher highs, this becomes your support. Now, it is supporting your monitoring of the trend because at at any one point, once the price reverses and touches the line, okay, once the market price retraces and touches the line, there will be a reversal. Once a reversal happens, it is an indication that the trend is still continuing. It gives you more confidence to stay a little bit longer in the trade. Yeah, because you know definitely at some point there will be a break of structure. If this is where the support was and there's a reversal after a retracement, you know that there will be a break of structure. So you have the confidence of remaining in this trade a little bit. Now, if another higher high is created and then you see this kind of retracement, if the market price comes and then it is supported again here through a reversal happening, you know that the trend is still continuing. The trend is still on. So you still even stay more longer in the trade. You gather more profit. Why? Because you know a point is going to come where there will be a break of structure. You get that? Now, as a trader, what do you do if you want to enter? If you want to enter the trend, but at the same time trade, the only thing you do is make sure whenever the market price is supported or it touches on your support line, which you've drawn over the trend line, and then it is supported or it reverses, enter at any point. Enter at any point and take profit to, you see this point? This is a break of structure. This is a point of a break of structure here. This is one point of a break of structure. Okay. This is another point of a break of structure. See that? That's another point of a break of structure. So as you enter the market price, as you enter the market, from whatever point you're going to enter, first of all, don't put it at the back of your mind. There's going to be a breakout. No. First take profit to that resistance. That previous resistance which brought about this reversal. Take profit up to there first. When the breakout happens, it is well, maybe you will go for more profit, but only enter from this point and exit at that point of a break of structure because you're not very sure whether there will be a break of structure. But at least you're pretty sure that there was a resistance around that point. Okay, you know that there was a resistance here. So there's a possibility that even this build up here may be resisted and then maybe it has a reversal. So you just want to be very sure. So take profit up to there. Same applies to the market price. And the same point happens here. When market price is supported, you take profit up to this resistance. Same applies to this point. If you enter this market price, if you enter here, take profit. As long as you confirm there's a reversal, that's how you take profit. All right? Along the trend, along the uptrend, you are taking off partial profit. Don't wait. Don't be greedy. Don't be this kind of person who enters here and wants to take a lot of all this. No. Take partial profits. Exit. Wait for another opportunity for a retracement and a reversal for the market price to be supported, then enter again, take another profit, wait for another opportunity for a reversal to your very same line. Because you have a guiding tool, you have something that is guiding you. So why would you just enter and trade blindly? Wait for a support on the trend line you've drawn. If the trend line supports your price and there's a reversal, which shows that there's a continuation in the trend, enter, take profit to the resistance, to the next resistance. The same applies to just keep on waiting, relax, don't get excited. Okay, so that's what you do. Now, that is if you want to draw it to monitor this trend. However, sometimes you may even monitor this trend through drawing both support and resistance. Now, when you're drawing both support and resistance, of course, this is when you're now introducing the resistance on top. And when you're drawing the resistance, you make sure you connect the higher highs and the two higher highs. Objective, don't worry. Others may move out slightly, others may not really touch your line. You may stop midway slightly. It is okay. Just identify any two or three, which will be your major focus. Draw your resistance there. So like in this case, I do this. I can pick and say I'm going to pick this, maybe this, and that. You see that? I'll draw with that. See? So that becomes my resistance. So the upper line becomes my resistance line and the lower line becomes my support. So I want to monitor how the market price is going to fare within this. When you draw both support and resistance, you would have established what we call a parallel channel. Parallel channel. A parallel channel in what format? where is the parallel channel moving towards? Is it ascending or descending? Definitely it is ascending. Ascension means it is going up. So this is what it means. So it will become an ascending, it becomes an ascending channel. It is ascending, yeah, it is moving up. So you want to see how the market price will be playing about and in between this channel, right? So that is the essence. So let me come here. Let me just try to do something here. Let me try to draw, let me try to just draw something here and try to relate. Let me relate it here. Relate. Let me relate. I want to relate with what I was saying, how you draw this. So I have this already. Okay, so I'll consider this trend. I'll consider this trend. This is a good one. Now you see here, the build-up of this trend started from here. You see, we had a little bit of consolidation, the market consolidation around here. The market consolidated for some time. There was no clear path. We had some market consolidation around here. As we can see, there was, having had this downtrend, we had a little bit of consolidation. The market consolidated. There were a lot of accumulation happening around this point before we finally saw an expansion. Now, this expansion brought about an uptrend market sentiment. So let's look around this. So we know that this is an uptrend already. This is an uptrend from the look of things. Yeah, it is already an uptrend. So what do we do? We pick our line, and then we make sure we put it on this very point, the very point of a reversal. The build-up started from here. So we shall select this lower low, then we pick out for any two higher lows. And pick 2, 3, doesn't matter, but pick out for the major one with the biggest dip, yeah. Put it, let the line touch on the wick of the low of the lowest low of the candles that are aligned there. So let's see. I can draw this. I can just decide to say I'm going to pick this point. Now, to me, what have I done? What have I done? I've only considered this. I've considered this point. Okay. So I've taken care of the point of reversal, and then this part and that part. So those are the parts that I've touched. You can see that this one did not really touch, this one didn't touch, this one did touch. But if I was to consider an area, I still call them part and partial of the area of support which I've drawn. Okay. So once you've done that, now your work is to see, you want to only monitor how far this trend is going to continue. Yeah. Yeah, so you see that at whatever point that the market price goes up, it comes back. And so like here, the build-up was like this. It came slightly here, then it built up there, it established a new higher high, then it dropped down back here. It established here, it was resisted, it did not go through together. But at final, it got that. There was another break of structure. So there was another dip here before building up to the other one, So you are able to monitor through just the trend that when the market price dips, right, you are very much aware that the trend is still continuing. The trend is still continuing. See here? So this is what we're seeing, that the trend is still continuing. It is slow but surely, but it is rising. You get that? Now, if you do that, that means you would have drawn it as a support. You just want to see, because at one point there's a likelihood that the market price is going to reverse. You may have something like this. The price may come back to the very support and it fails to be supported, then we see boom, a breakout below this support. Once a breakout happens below this support, this is what is going to happen. Comes down, breaks below the support, goes to retest it, and then boom. This is a dangerous thing. It means the trend has changed. It is no longer going to continue up. It means this market trend has reversed. It is now going to go to the downside. So the essence of doing this was to look out for any possibility of a breakout to the downside. Is there a point that is going to come, really, where the price is going to come towards the support and it is going to fail to be supported? It is going to go below the support. Once that happens, it's already a signal that anything can happen anytime soon. So if you're in the trade, check up what you can take and exit the market. You get that? Otherwise, if the breakout happens and then there's a retest, it will deceive you, of course, that there's a retest. It becomes a little bit below, then it tries to deceive you that it is rising again. Then the next thing you see is a break of this structure to the downside. Then again comes and retest another break of structure to the downside, and continuously you see the market price dipping before your very eyes. So sometimes it is important to do that. Now, if you draw as a single line, that's what you would do. Alternatively, you can even draw it as a double line. Simply pick any two. You can pick any 2 points and draw this. Yeah, you can draw this. It still becomes as an ascending channel because you're connected to higher highs of 3. But then the best way of drawing it as a channel that makes it more clear and beautiful is when you use what we call the parallel channel. This tool, I believe everyone is conversant with this. The parallel channel. Now, when you pick the parallel channel and put it here, it brings out the whatever very clearly. So you first begin by drawing your support, then you release it there, then you just hold this other part, the middle part, and drag it upwards and let it touch any higher high. If it touches any higher high, you look out for the highest higher high. Okay, that's what you're going to make the upper line to touch. And that upper line will now be your resistance. The lower line will be your support. Now, in doing this, you're going to see that the parallel channel has 3 lines. It has the upper line, the lower line, and the middle line. The middle line, let me first set it up. The middle line is also a support and a resistance. It is also support and resistance. It is also support and a resistance. See that? There's also support and resistance. Now, at some point, the middle line will act as a support. At some point, it will act as a resistance. I hope you understand that. Like in this case, you also, even as you're trading, you also take consideration of that middle line because it is also acting as a mini support and a mini resistance. And prices will always react to them. Like you see at this point, if you can check very clearly, at this point, the price reacted to it. You see here, at this point, price reacted to it, right? The price came down, went up, it was rejected, then it came down. So it means it reacted, the price reacted to it here. You can see that? At this point. Here it was acting as a resistance. See that? It rejected the price from going up. The price built up, it rejected it, and then it had no option, but rather to come down. You see that? Okay. Same applies to this point. It was still a resistance. But when it was broken above, as it was coming here it was acting as a support. See that? It was acting as a support at this point. Okay? Here it was acting as a resistance again. And continuously, you can also see how powerful this middle line can be with regards to price reaction. Here it is a serious resistance. Serious one. You see that? Equally here, it is much as the candle, the wicks of the candle went slightly above it, it is still a strong resistance because the price did not successfully break above it. You see? So the actual breakout happened when, if you check here, this is where the actual breakout happened. See that? So with this breakout, we are very pretty sure that now the next destination of the resistance will be that. So if it hits that level, that's when we expect the price to again now begin coming down. And when it's beginning to come down, we know that this middle line will still play a part. It may either come and then it supports the price and then the price goes up, or it may even be sufficient enough to build up a momentum that will cause a breakout of this upper resistance. You see that? It is a possibility, because if the price comes and then it is supported here, it will either come and then again get another resistance, or it gets resisted by that upper line, comes back again, get resisted, or even come down. Then on its approach of going upward, that's when it will successfully break above the upper resistance. It is a possibility. But as a trader, that is none of your business. You're only looking out for what is happening, what is most likely going to happen in the recent or in the most recent time, because that is what you want to benefit from as a trader. So enter here, enter current price. Even in an uptrend, you know that the price has broken above the middle line. In this case, now it is your support because the price is above it. So you're going to take profit maybe up to there. Wow, this is 9%. Too much, but good. Then you know that if at all there's any possibility of a retracement or of a drop, you know that this is what is going to happen. You have from that point, you expect the price to drop below here, yeah, to this line, the middle line. So you expect the price to be supported. So this is about a 2-point-something% dip. Yeah, that is what you expect. You know, that's what you expect, right? That is what you expect. And let's go to a lower time frame and try to check out how this price is playing. So in the lower time frame, you're seeing that even this other point, you know, the price is faring on really in a manner that you see, it is still faring on. This is what happens in the market. In a higher time frame, it may show a different thing. In a lower time frame, it shows a different thing. But at the end of it all, if in the bigger picture, the higher time frame is telling you that, you know what, this is what is likely to happen. If you go to a lower time frame and find something like this, don't get moved. Don't get moved. In fact, if you should even look more keenly to identify how to enter the market earlier. Like in this case, you see, if you entered current price, it's still good. But also, you know, from the look of thing, you know, this middle line from the ascending channel, you see this middle line, the dotted line running, it's a good support for you. It's a good area of consideration in terms of support. So if at all you're establishing an margin call drop, you are not going to overlook at this point. Just look at it and drag it to that point to get your margin call drop. That's however much it is playing, behaving, but you know the destination is this. At every cost, it will have to touch this. If it is to continue, that is, if this trend is a continuation, it will have to touch this point. Unless it reverses and comes below past the mini support in this case. Okay, so that is on an uptrend. That's what you do on an uptrend. All right. Okay, so a little bit of a reflection. There are 4 key things we do when we're drawing these trend lines on an uptrend. And majorly, if I may ask, 1, what is the essence of drawing it on an uptrend? Possibly, maybe someone can type on the chat. Why do we need to draw this trend line on an uptrend? Why do we need to monitor? Okay, why do you need to draw this trend line, this support and resistance on a trend, on a given trend? It can be an uptrend, it can be a downtrend. Why is it necessary that we draw this support and resistance? Like in this case, why is it necessary that we draw the ascending channel on this trend? Why? Any response? I said there are about 4 to 5. 1, perfect, Emmanuel, to look for an entry point. That is very good. Yes, a point of entry and exit, that is beautiful. To monitor the trend to identify for a possibility of a breakout. That is good. Lean, Carol, that's a good one. We do it to monitor. We just want to see how far it goes. Honestly, we just want to see how far it is going to go because we don't want to trade blindly. That's perfect. Sheila to exit price, to know exit price and entry point. Beautiful. To identify entry and exit, to know the movements. Okay. Okay. Yeah. Mm-hmm. Mm-hmm. To monitor the market movement, monitor how far the trend will persist. That is beautiful, Emmanuel. Emmanuel is a good student. We were following seriously. Yeah, Yona, breakout point. Beautiful. I think we have got the point. We're really getting the point. Why there's really need for drawing this trend line. Okay. We draw it to monitor. Yeah, we draw it to monitor the trend. We want to see how far the price is going to rise because we know it is not going to rise forever. There's a point that is going to come where the price is going to be halted. There is a price level, there is a resistance area or a resistance price or a resistance line where the price is going to be halted. And once it is halted, we are going to see a reversal to the downside. We are going to see the opposite of what we are monitoring happening again. Okay, the price will now begin dropping significantly. Why? Because people will begin taking profit. People will be taking profit off. Yeah. After significant rise, people need to take profit. When the price rises so much, people need profit. So as they sell, the price drops significantly. So we want to see before the price can begin going against us, should we still remain in the trade or we exit? If we should, then something has to tell us, a communication has to happen here. We need to see the price constantly being supported. And we need to begin seeing a breakout, continuous breakout happening, or establishment of higher highs being formed continuously. Higher high, higher high. We want to see that. Otherwise, with that, we may not be safe. Yeah. So we want to monitor. Okay. So that if we come across another thing, how we shall know that the trend has come to an end is when we see a breakout to the downside. Meaning, what is a breakout to the downside? It means once the price begins to drop, it comes to this support, which was helping us and guiding us through the trend in the monitoring. It comes through that point and then fails to be supported. Rather, the price now comes below, it breaks below it. Once this breakout happens, and then there's a retracement in an attempt to retest, then finally another break of structure, because now this will be the new support. If this new support is broken again, we just now confirm that this trend has changed. So if we are looking out for more profit, we can rather cut the loss, take out whatever we can take from the build up. Okay. Yeah. So that's basically. Then when it comes to a lower time, I mean to a downtrend, we could as well do that. Let me check out for it. If there is any coin that we can. Yep. Woo-wee, whoop. Da-da-da-da-da. Oh man, what? Whoa, 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 whoa. Hey. Beautiful. Whoa, whoa, whoa. This is beautiful. For now. Wow. Mm, wow. Mm, wow. Let's do some analysis. Let's see a breakout building up. Mm-hmm. Mm-hmm. Yeah. Some money today. Yeah. Let's see some money today. Some money today. Some money today. Let's see some money today. Let's see some money today. Just want to do something here and I see. Some money to them. Some money to them. Some money to them. Some money to them. There's some money to them. Just let's try to check some money. Let me drop like something in here. Just a minute, guys. Let me give some people some money to make. Huh? Make some people give some people some money to make. Just a minute. I want us to take some 3%. Then this should be. Let's consider taking how much. Ish, why are you running? Why are you running? Why are you running? Nevertheless, still, we want this 0.9. Sorry, 9. Why are you running? Why are you running? Why are you running? Where are you running? What variable you have to take up? Why are you running? I know. Why are you running? Why? Do I have any obstacle in between? Nada. No obstacle, right? Okay. Is there an obstacle in between? Hakuna matata. Huh? You have an obstacle? Hakuna matata. Let's go. I do it. We're going for IOTA, not IOST. IOTA. There we go. We give out to the other communities as well. Which other one? Make some money here. Okay. All right, let's come back. So okay. Let's see that build up. Let's see what happens. What happens there? Okay. So I hope we are good. We understood that part very well. Just a minute. And I come back. Just we stay on. Let me just do this. Okay. Mm. Okay. So I hope you're okay. Okay. Hello. It is. Somebody is saying it is it is IOST. Yep. 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 Oh yeah. Oh man. It is IOST. True. 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 It is IOST, not IOTA. But IOTA, we shall do analysis for IOTA as well, so that we can as well just make sure IOST. IOST. It is IOST, right? IOST. IOST. It is IOST. Hmm. It is IOST, not IOTA. It is IOST. IOST. IOST, not IOTA. Let me change it from the other group as well. It is IOST. 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 Not IOTA. It's IOST. IOST. But nevertheless, IOTA is equally. We shall check and see. IOST. Okay, IOST. Should be IOST. But okay. So let's let me check on the other one was IOST. Yeah? Let me check on if they have an IOTA in this list here. Otherwise, down IOTA. IOTA. IOTA should be down here. Oh, IOTA is here. Let's check through IOTA. Let's just analyze IOTA so so that we really don't. Okay. Okay. Let's a minute. Yeah. Mhm. There's a lot of indecision candles here with the iota. A lot of indecision candle, but it shows some possibility of. I'm gonna keep tab of this, but what I see is something cooking as well for iota. So something cooking for iota as well because of double. This is triple retest. It's something as if we you know this is a triple retest, like retesting 3 times, and this area is really supporting this price, and there's something cooking up as well. This Internet of Things is amazing. This coin is project is beautiful. I believe it's something is cooking really up. Trust me, it is cooking up, and it's before we it, we're gonna see something great happening. Because now here the way it is wandering here, the way it is behaving, the way it is consolidating within this region. Just trying to tell them something. Let's see how it unfolds, but basically, still it will be safe. Anyone who enters here, let's try to monitor and see how it goes for iota. Why I cannot say we first entered, because there's a lot of indecision kind of seeing, even until we have a clear picture of what is happening. Because indecision candles can result to any market sentiment. Yeah, the upside, downside. Yeah. So let's have a perfect picture first before we can trade. But let me save these settings. I just want to monitor through and see. It is beautiful, and you can confirm it. Okay. It's beautiful, we can confirm it. Let me just see. Okay. Maybe in the course of the day, it may pick up because it is really within the oversold region. It is around there, not so bad, not really bad. Because of this buying pressure candle is already an indication that there's some pressure building up in the market. There's the buying pressure candle. This one here, this hammer sort of, it's a good indication that there's some pressure building up. But we can yet not conclude because it's still very early. In the high time frame, 1 day, it's telling us it's already there. 4 hours, it is within the period there. Here it is midway. 30 minutes, it is just there. Let's see how it unfolds for IOTA. Okay, I think that's safe. We may end here for today, or possibly the downtrend is equally the same when you're doing you have to trade with margin calls, my friend. Trade with margin calls. Trade with margin calls. Though, personally, I always advise you open a margin call at a time. Yeah, just open margin call at a time. Maybe let me receive some questions. I one or two. Massive. There's a massive yesterday. Yes, please, may I ask a question? Unmute yourself and ask a question before we can end. Massive. I think there are moments when you should just have a question. Like this, sometimes back.
Hello.
Yes, please.
Yeah, good morning.
Yes.
Hello, good morning, leader. Good morning.
Good morning.
Yes, sir. Thank you so much. Thank you so much. Please, I still have questions. Yesterday, the question you explained to me yesterday was not that clear. So I was trying to come up to clarify, but you could not allow the mic. It was muted. My question is still on that call drop area. I'm still kind of confusing. Yeah, when you take minus 0.9, sometimes, for example, now, if I have 7 call margin call, right? How do I set the drop? Should I maintain that 0.9 all through the 7 margin call?
Look,
or I'm going to distribute. Okay.
To be honest,
yes, sir.
There is no a fixed pattern on how you establish the call drop. There is no like fixed figure. Why we normally recommend you establishing a margin establishing a margin call drop at this time. We really want to base on what we're seeing in the market. We want to base on what is actually transpiring in the market. We don't want to assume. You cannot assume that the market is going to dip by 2%. You cannot assume the market is going to dip by 10%. Though you can look at a range in the dip based on your analysis on the chart. Let me give a simple example. Let me just give a live example and we see. Okay, let me just give something here. Maybe it will also be helpful for the other people. You can never have a fixed settings or fixed figure. Though at times some people may recommend So, but personally not, because it's the market movement is not fixed. There's no fixed path that the market takes. For example, let me just pick maybe 1 inch. I just explain. Maybe use it for explanation. Now, you look here on this. Let me go to maybe 4 hours time frame. Now, look at this market, the market price of inch, and then tell me that this is the region within which at least there's been some consistent of support happening at. Let me just use this one here. You see this area? This is an area where there's high level of support happening at this key area. Now, if you want to enter this trade, of course, you know that if you're going to enter current price, or you want to enter at percent, maybe the first immediate point you're going to establish as your entry point will be this nearest support line or support area, right? Now, if you want to establish margin call drop, you are aware there's a possibility that the market price may dip past that level, maybe to around here, or within the area, or even the lower part. You get that? It may be here. It may actually come exactly. It may come close to your support area. It may be on the upper part of the support area. It may be within the support area. It may be at the lower part of the support, whatever you've drawn using that. Now you cannot have a fixed figure and say, okay, because it is like this. Now, normally it is
leader, please.
It is
If you put it on, if you place it on -6.46, my question is like, can we take that -6.46 all through the margin call and all through the margin call drops, all those 6 or 7s one, depending on the margin call limit I have? Like, is it going to be -6.46 all through if I'm taking this point?
I cannot tell you like that. Let me give
Coach
you something. 6%.
Coach Musa, can I help you answer this person?
Okay.
The reason why Coach Musa is teaching you trade analysis is basically to set your margin calls depending on support and resistance. Yes. So now for you have still a philosophy in your head that I want to open 7 margin calls, 10 margin calls, 6 margin calls. He's saying, using support and resistance from your entry, you open your next margin call to the next support. That's what he's talking about. So the ideology of you thinking of 7 margin calls, 8 margin calls is okay, but he's saying open 1 margin call at a time, depending on your next support. That's what he's talking about.
Yes. So, thank you very much, Juliet.
So I think he's trying to confuse setting up a preset price.
Yeah, I want him to look at this. Look at this. Look at this. Look at this. In the 4 hours time frame, when you were measuring the drop, it was talking about -6.3.
Yes.
Right?
Yes.
Now, if you go to a lower time frame, like 30 minutes, are you seeing that there are possibilities of the market price dropping at these respective levels?
Okay,
because
that's -6.30.
Look at this, that the price went up here, dropped back here, then there was another break of structure here, then it came and retested, then there was the other break of structure before the market price came back here, then there was the other one. Now, with regards to what you're saying, you cannot say there must be a fixed figure, though from the pattern in the manner in which the market price was dropping and establishing continuous higher lows within this trend, you can be able to vary your call drop. Like, for example, the first one you can say from here to here, the margin call drop is going to be 1.6, right? Then you say, okay, if the robot buys off that position, buys position at that level after the market price dropping at that, you're going to measure the second. This is the next point, 1.4.
Yeah.
Then the next point will be probably say, okay, from 1.4, you have from this point to the next, this is another 1.17, right? Continuously, and you're distributing, but based on what your market structure is indicating. You're not gonna just established that it should be like that. Though sometimes some people measure this, whatever, then they divide by the number of call margins they want to establish. Like you want to establish 4, you divide by 4. Then you put it uniform. It is still okay. Though for me, why I like so much to base on what the structure is telling me, because it's a reality. It's not gambling. You're not imagining. It's what is the possibility of what you're seeing happening. Okay, you're not just imagining. You may establish and really the market price does not drop by 2, rather it drops maybe by 1.6, and then a reverse happens. In that case, it means the robot would have not bought. Now, because the robot would have not, has not bought, there's a likelihood that, of course, you may take a little longer to realize your TP, because for someone who allowed the robot buy, probably even the gap, the floating loss reduced, because every time the robot buys, if you have monitored that, there's an effect that happens on the on the return rate. If it was floating at -1, if the robot buys, there's a way to reduce it. It can be around negative, depending on the amount the position amount that was injected in. It can even reduce by half, 0.5% negative, 0.2%, or even 0.8. It is still a significant reduction, because you will never be the same person who did not allow his or her robot to buy. If you as bought and reduced the floating loss by 0.2%, and the other person, the robot, did not buy, and it is still maintained at 2%, who exits the market earlier if all of you are taking 2%? This other person whose robot bought will exit the market faster. And sometimes the effect of that person who exited the market faster or earlier can even cause you not to realize the 2%, right?
Yeah.
Because imagine everyone allowed the robot to buy, and all their floating loss was reduced by negative 0.2%. And for you did not. Now, all those people whose robot bought exit the market at once, earlier than you, whose robot did not buy. So you have to be patient and wait a little bit for that 0.2% to be achieved before you can also exit or the robot sells. So that's what literally we're trying to say, that there are different ways in which you can do this. If you also divide, it is okay. Though for me, I so much prefer basing on this. But in that way, it's also okay. Yeah. It is still okay. Okay.
All right.
I hope that is okay.
Yes.
I think there's no more any question. We could do end.
Thank you.
Eman, can we take one more, or it is time up, dealer Julius? Just end it. Emmanuel, I hope it is short and brief.
Thank you very much, sir, for this wonderful lecture. You are a good teacher indeed. But I want to ask this question. When is the best duration to take our support and resistance level, and also to mark our take profit? The support and resistance, I said, when is the best duration? For this time, if I want to take my support and the resistance level, what is the best duration for it? Is it 4 hours or 1 day? And
Okay. If I get you right, you want a duration for taking support and resistance, or you want the time frame in which you can try to analyze and probably look at for an entry.
Yes, the time frame. After taking the support and resistance level, then the next one is the take profit. When should I set the time frame? Yeah.
After establishing, after drawing your support and resistance on a higher time frame, you go to a lower time frame, preferably 1 hour or 30 minutes. And then in between, you can as well, I thought I discussed this, in between, look out for that major support you've drawn and major resistance. If at all there's any other mini resistance and mini support, based on that mini support and mini resistance, to establish margin call drop and also take profit. If there's no any barrier in between, if the TP, there's no any barrier in between the major resistance and your current price, just take the whole of that measurement. But if there is a mini resistance in between, then you just based on the mini resistance to be your exit point. So you measure the distance from the current price to that mini resistance. Whatever percentage you get, take that.
Okay, sir.
Yeah.
Thank you very much.
You're welcome. Okay. Leader Julius, I think we may end for today. Yeah. Is Leader Julius on? I think he's not. He's no more. So we may end here for today. Let's catch up again tomorrow, same time, and we'll see what happens. Thank you very much for being part of the Zoom today. Have a blessed morning. Yeah.